It's Tuesday, June 14th, 2022. Well, it was a somewhat flat day today. Dow Jones down 150 points, S&P down 13.75, and NASDAQ up a whopping 19 points. I think that it was pretty flat today, although we began to see the Dow really slip away right around noon. It was down about 350, 360 points, and then kind of came back a little bit and finished down only 150. But I think everybody is waiting for tomorrow. And please do me a favor, comment down below. What is going to happen to these markets tomorrow? Are they going to rally, or are we going to see a disastrous day on Wall Street? We'll talk about the rate increase a little bit further into this video, but please comment down below. What happens tomorrow? Are markets going to rally, or are they just going to get slammed? CNBC, wholesale prices rose 10.8% in May, near a record annual pace. Now this PPI is going to get passed on to the consumer, onto you and I think that getting this PPI number today of 10.8%, I think this solidifies and almost guarantees that we see a minimal 75 basis point hike tomorrow. I think we have a 90% chance of a 75 basis point hike, and I think that there's a 50% chance that we could see a 100 basis point rate hike tomorrow. So let me know your thoughts on that. I think 50 now is out of the question. I think minimally it has to be 75 basis points, and there is a 50-50 chance, in my opinion, and in many of yours and many of the economists out there, there is a chance now of a full 1% rate increase tomorrow. But I do believe that getting this PPI today at 10.8%, I believe the Fed has absolutely no choice now but to go at least 75 basis points. That should go higher. In my opinion, 100 basis points minimally. 10-year bond yield today, 3.48. I saw it at 3.49, but as I make this video, it's 3.48 and change. Highest since 2011. Not a good sign. Real estate firms Compass and Redfin announced layoffs as housing market slows. The 30-year fixed rate today came in at 6.28%. And I think that that's really going to take a toll on real estate companies and the real estate industry as a whole. 6.28%. And tomorrow, I believe we get a 75 basis point rate hike. Could be 50. I'm not 100% sure, but I do believe it's going to be 75 basis points minimally, and I would not be shocked to see 100 basis points tomorrow. Going back to the 30-year fixed at 6.28%. Early January, the 30-year was sitting at 3.29%, and last week it was at 5.5%. This 30-year is raging out of control, and it is going much higher. I didn't think that we would break 6% till the end of this month. We've already done it. Now the question is, by the end of this month, do we see 7% on the 30-year or more? This thing is really going to get out of control, and there are still people out there that believe that the Fed is not going to raise rates tomorrow. I mean, just as of a couple days ago, people were commenting going, the Fed will not raise rates on Wednesday. They can't raise rates. I've been hearing about this all year, and they're raising rates. This will now be, what, the third rate hike this year, more coming. And I don't believe they're going to reverse course. They cannot reverse course. Get ready. The economy is going to be destroyed. The housing market is going to be destroyed, and the stock market is going to be destroyed. But going back to this article, Compass announced a 10% cut to its workforce, and Redfin announced an 8% cut to its workforce. Now, these companies have agents and they have people that work in the technical areas of these companies. And it didn't say if it's going to be agents, if it's going to be people on the tech side, or a combination of both. But home sales have been dropping for several months now. And when you have a 30-year fixed rate at 6.28%, you're going to see layoffs. You're going to see the housing market continue to slow. Now, there are always people that always comment, and people that I talk to on a daily basis that go, well, this is normal. You know, 5-6%, totally normal. Yes, this is a normal rate in a normal market. This is not a normal market. This is an abnormal market. When you have homes that sold a couple years ago for $300,000 and now they're $5,000 and $6,000 or $700,000, that's not normal. You start tagging on 6.28% on these type of numbers, you're pricing out millions of people, and you're going to see a real estate crash. You're going to see people who just cannot afford to pay their utility bills. They can't afford to put gas in their cars. They can't afford to put food on the table. They're going to be forced to sell their homes. We're going to see massive amounts of inventory coming to the real estate market. People are going to be forced to sell. You have people right now who have defaulted, who are in foreclosure. You have a massive amount of new homes under construction right now. And then you just have people who have to move, and just the normal things in life that people sell their homes and move. You're going to see a massive amount of inventory coming. And again, it's going to be driven by people getting laid off their jobs and not able to pay their bills. And they're going to be forced to sell. Article today in crypto world, BlockFi, the Peter Thiel-backed crypto lending startup, cuts 20% of its staff as Bitcoin plunges. More pain and suffering coming to Bitcoin and crypto. Here's another article today. This is coming from CNBC. Fed likely to boost interest rates by 0.75 of a point this week. Comment down below. Is it going to be 50, 75, or 100? Love to know your thoughts on that. Another article today. Fortunes of crypto billionaires are melting with Bitcoin crash. As I make this video, Bitcoin's hovering right around $22,000. Now, when we look at the amount of money over the weekend, 200 billion just pulled right out of the crypto markets. I think this year it's over $1 trillion have been just evaporated right out of these crypto markets. And it just seems to be getting worse every day. You're going to see a lot of remorse from people who bought into this Ponzi scheme and who didn't take their profits out, who stayed a little too long at the poker table and now are very regretful. And this is greed, ladies and gentlemen, greed, where people they made a lot of money, but they didn't pull it out. They just kept doubling down and just hoping that it was going to keep doubling and doubling and that they would make more and more. I watched a video a couple nights ago, and a gentleman held up a thumb drive, and he said this thumb drive at one point could buy 4 Lamborghinis. Today, it's worth $5. And this guy was literally tearing up because he admitted the greed. He said he could have got out, taken profits, at least sold some of this and walked out with some money. He didn't. He stayed in too long, and now it's worth $5. And this is going to happen to a lot of people in the real estate market too. Many people who are staying in too long, who have stayed in, now listing their homes, not getting anybody knocking down their door. They're not getting $100,000 or $200,000 or $300,000 offers over the listing price. And now they're going to be lucky that they can even get an offer and close. Because think about the pool of qualified buyers now that has just been erased right off the table because interest rates, the 30-year fix at 6.28% today and going higher. And how many people now are thinking like, maybe we better just sit back a little bit and see how this real estate market plays out, because if rates start really going up, at some point, I believe prices of homes are going to start coming down. And if you really follow these markets and you understand that a lot of inventory is coming, you have rising inventory, rising rates. Well, it doesn't take a rocket scientist to figure out you're going to have to bring prices down. But going back to this article, fortunes of crypto billionaires are melting with Bitcoin crash. Think about what kind of impact this is going to have on the economy, especially in luxury real estate, luxury automobiles, luxury watches, because so much of this money that came in to these luxury markets, a lot of it came in from crypto, and now it's being decimated. And as it just vaporizes, the amount of buyers for Ferraris and Lamborghinis and these high-end watches, now you're watching the luxury watch market pull back 15, 20% and even more on some of these watches. And why is that? Well, it's because I think this has a lot to do with the crypto market crashing, and a lot of this wealth in crypto is being decimated. And now we're going to see the wealth in real estate decimated, where people felt that they were very wealthy because they had all this equity in their homes. As soon as they begin to lose that equity and that equity shrinks, they're not going to feel so rich. And many people are going to be upside down in their homes, and they're going to feel very, very poor. So all this is changing, and we're beginning to see the luxury home market slow down, another telltale sign of what's coming. But as we begin to see more people losing money in crypto, the wealth effect in real estate disappearing, it's going to affect this economy, and it's going to affect a lot of these luxury markets in the economy. The hedge today: electricity costs soar across much of Illinois as risk of brownouts loom. Some cities will see their energy costs this summer double. How are people, I mean, please comment down below, how are people going to survive? I can tell you, I see the cost of everything going up right now, and this is affecting my life. I'm sure it's affecting your life. But you know, if you're making $30,000 or $40,000 and you're paying $5, $6, $7, $8 for a gallon of gas, and your electricity bill doubles, I just don't have an answer. I don't know how people are going to survive this. I do know that a lot of people are going to be really hurt. And again, this is why we're going to see so many homes flood the market, as people are going to be forced to sell their homes and get out and cash out with whatever they can, or they're going to lose their homes. We're going to see a lot of people default. We're going to see a lot of people's credit destroyed because they're not going to be able to keep up with the car payments. I talked to my friend Mike yesterday, and he was telling me he has a very, very good friend in the repo business. He said this guy is working 7 days a week, literally 24 hours a day, repoing cars. He can't keep up with the demand. So what does this tell us? That now people's cars are being repoed. It's a matter of time before they lose their homes. How many people right now are 60, 90 days behind on a house payment? It's just a mess. And it gets worse. Over 20 million households struggle to pay energy bills, and it will get worse according to this article on the hedge. So it's not just affecting the state of Illinois, it's affecting many states across the country, probably every state. Everybody's feeling the pain. Over 20 million households are $23 billion behind on their utility bills. Have we ever heard or seen anything like this in America, ever? I've never, ever read news like this in my life. What in the world is going on? This does not end well, and this is why I've been making these videos for a few years, warning you, sounding the alarm. Something was very wrong. It was very wrong since the 2008 crash. It never got fixed. It was only a matter of time before this bubble began to blow up. And I'm not saying the bubble's even blown up yet. I think we got a ways to go here. But we have printed and injected so much money since 2009 into this economy. And people just didn't understand that you can't print money to infinity and not have repercussions. And people thought that just after years and years of this, and they weren't really seeing any repercussions or consequences, that we could just do this forever. Well, now all of a sudden, we're beginning to see this infection fester on the patient. And we don't really have an antibiotic to fix it. And we're about to go through a lot of pain here, and it's about to get much, much worse. Peter Schiff said peak inflation was a fairy tale, just like transitory inflation was a fairy tale. And there's people out there that say it's not that bad because wages have increased. But why are Americans running up record amounts of debt? Why is credit card debt off the charts? Inflation is much higher than any wage increases. So people's wages are being destroyed. Their savings being destroyed. Purchasing power being destroyed. If you use the CPI formula from the 1970s, CPI right now is above 17%. Mr. Schiff said we are now seeing the result of the Fed flooding the economy with money since 2009, and we are drowning in inflation. So we don't have a lot of choices, in my opinion. The Fed is going to have to get so aggressive here. So aggressive. And there's no answer right now. I mean, there is an answer, but we have a couple problems that the Fed really can't control, and that's oil and food. And as long as energy prices continue to skyrocket and we have this food crisis causing food prices to skyrocket, we're going to continue to have big trouble. But no doubt the Fed is going to have to get aggressive to get some sort of hold on this inflation before it gets too out of control. And they're going to have to aggressively raise rates. If you're depending on the Fed to reverse course, I think I got some bad news for you. I don't think they're going to do it. In fact, I think they're going to put their foot on the accelerator here and really get aggressive. That's my opinion. And as they do, you're going to watch the economy get absolutely wrecked. Stock market wrecked. And if they do not get aggressive enough, the inflation is still going to be much higher than the interest rate and much higher than any wage increases out there. So we got a real serious situation on our hands here. And the only thing that I can advise everybody to do is continue to take on the side hustles and stockpile cash, buy some gold, buy some silver, get all your emergency preparations situated as we talk about on a daily basis. It's really simple. That's all you can do right now. Nobody knows what's really going to happen tomorrow, next week, or next month, but we can connect the dots here. We can kind of look at the trends that have been forming of where this is going, and it seems, in my opinion, that it's going to get worse. And 97, 98% of this country is not prepared for the worst. And many of us, I don't think really can interpret how bad this could get, how long this can last. When we had the 2008 financial crisis, I thought, well, maybe it'll be a bad year, we'll have a bad year and then things will come back. But it took a few years and a lot of money printing to get things back. And a lot of people lost everything. This is going to be much worse because we are going to raise rates, not lower rates like we did back then. We're going to do the opposite. We're going to raise rates heading into a depression. We now have 3 times the amount of debt that we had from the 2008 financial crisis. You look at the amount of margin debt, you look at the derivative market, you look at household debt, you look at the price of a gallon of gas now compared to then, it's not even close to 2008. That's why I believe this will be so much worse than 2008. And many of you have been preparing for many years and have seen this coming. And I've been preparing for a decent amount of years myself. But nothing, I think, can really prepare us for what we are about to see. The pain, suffering, devastation, the despair, people going hungry, friends we know going homeless. I don't think anything can really mentally prepare us for what we are about to see. And this is why I say get right with God, walk with God daily, say your prayers, and thank God for everything you have right now, and ask Him for direction. And ask Him to make you stronger, because it's really going to take a toll, I think, on your heart and your spirit with what you're about to see. I really, truly believe that. And, I've been out there, Sid and I have been out there feeding the homeless, feeding the animals. And you just ask yourself, how did people get here? And so many of those people were not addicted to drugs and alcohol, a lot of those people had homes. Some people owned businesses, and they got medical debt. They lost their house in '08, never rebounded, lost their businesses, went through a bad divorce, just things like that, and had nobody to fall back on, had no church. And the churches, as we all know, have checked out. So, as I leave you today, surround yourself. If you have a good church, you're blessed. Stay close to that church. Surround yourself with good people, ladies and gentlemen. Surround yourself with people who are awake. Get rid of the toxic people. Get rid of the fake people. Do not sit at the table with rats. Sit at the table with lions. Surround yourself with good people. And that might only be 2 people. It might be 1 person. It might be 5 people. But right now, you've got to eliminate the people who are asleep, the people who are dumbed down, who don't want to listen, who don't want to wake up, the people who are not prepared. They bring nothing to the table for you. You need to be surrounding yourself with people who bring something to the table, people who know how to do something, who have a skill set, a trade, people who are preparing just like you and I. This is what you need to be doing right now. I'm going to leave it there today. Have a wonderful, wonderful day. Have a wonderful rest of the week. I look very, very forward to speaking with all of you very, very soon. Please give this video a thumbs up, share it everywhere. Make sure you subscribe. God bless.